good afternoon. You're watching Closing Trades on ET now, and for now the market has staged a bit of a recovery as we speak. So 24,300 is where we are back at. But where do we go from here on in the next 1 hour will be crucial to track. Having said that, it's the broader markets which is clearly outperforming today. So your mid-cap and the small-cap indices are holding in the green, even though the Bank Nifty continues to be under pressure. Talking about individual names and sectors, public sector entities managed to show a bit of a bounce back. Energy names were also fairly active and we were watching out for that. So take a look at ONGC. That stock is up almost 3% in the trading session. A bit of a bounce back on BPCL as well. Coal India too has managed to perk up. So public sector entities getting their mojo back, at least for the trading session today. What's on the downside is Bajaj Finance. Nestle India too is coming under pressure. And then ICICI Bank, which got a downgrade from Axis Cap, is also a bit under pressure, and HDFC Bank too is down and out. From the broader markets, shipping companies definitely deserve a mention. We of course broke the story how budget could be focusing on shipping companies as well. So Shreyas Shipping, GE Shipping, rest of the names as well, whether a Shipping Corporation of India, etc., or even Mazgaon Dock and Cochin Shipyards of the world, they're all reacting positively. And talking about the entire energy basket, apart from BPCL, ONGC, etc., add to that list Engineers India, which is an ancillary play to that, even MRPL for that matter, and Data Patterns. Of course, Aisha is reacting to the news flow that DRDO has partnered with 7 private companies, and Data Patterns is one of them. So that stock has shot up too.
Oh yeah, absolutely. The Bernstein note on Sona Comstar definitely is keeping it, quite perky in trade. It's currently trading at those 700 plus levels. They're saying that it's a target price of 780 now that they've set on the stock. Talking about the current order book, which they're impressed by, which is currently at 7.6 times the trailing revenues, and 30% of the orders they say are going to start production in the first half of FY25. So that's Sona Comstar in trade. For Ambuja as well, there's an upgrade from the House of Nomura. They've upgraded it to a buy from the earlier reduce, up the target price to 780 all the way from the current 500. The stock currently at 676 thereabouts. But it's not looking all that bad, as definitely the case yesterday was. You've got an HPCL which is up about 4.6%. ONGC has been a very strong show, 2.6% higher. In fact, so far year to date, if you were to just bring up the ONGC chart, it's not done badly at all. Sun TV is holding out very well, a good 3% move there. India Cement is quite the buzzer in trade, another 3% of a move, and Polycab as well holding out a good 3.5% as we speak. I mean, having said that, the market does have its fair share of losers as well. Bajaj Finance, Sun Pharma, Shriram, L&T, M&M, etc. are definitely down, and some of these mid-cap IT names are the ones also which are seeing some ebb off. So Coforge, OFSS, they're down. Naukri is down 2.5%. Vedanta, Zydus Live outside of that list as well are seeing some amount of ease off. But let's welcome on board Sandeep Sabharwal as well. Sandeep, hi, afternoon. Tell us how your travels were and, given that back home, the thrust in India is all about infrastructure. How long before we hit the European or the US levels?
Aisha, travels are always good. I think relaxing, driving on the roads all across Europe. So I think for India to get there, it's a couple of decades at least. I don't think we're going to get there as fast as most people think. I think those people who think that we are doing very well are those actually who haven't gone there. So I think that's how it is. But I think that's on that. Overall, markets are showing some sorts of signs of fatigue after the sharp run-up of the last quarter. And that is natural that markets stagnate at some time. The longer the consolidation goes on, the better it is normally for the markets. So I think there's nothing wrong in that. Result season this time becomes very important because of the sharp run-up we've seen across stocks and sectors, and as such, wherever the valuations are very high and there are result disappointments, we could see sharp sell-offs.
So where do you think expectations are high and we are in for a potential post-number sell-off?
I think where valuations are high, expectations are high, are all the defense names, infrastructure names, capital good, etc. So I think that's where I think if there are disappointments, we could see some sort of sell-off coming through. Where expectations are low are consumer stocks, technology, etc. So I think on the flip side here, if the result delivery is better than expectation, then the up moves could be more than potential down moves on any sort of disappointment.
We have TCS numbers today, Sandeep. While you can say that that was one company which did better last quarter on a relative basis, not on an absolute basis. Do you think we are in for a mild surprise from IT, or the stress in the business will continue?
I think we've just seen Tata Elxsi results, so where despite moderate expectation, the results are actually even below those moderate expectations. Now, TCS expectations, I think, are quite moderate relative to whatever the overall order book is. And to that extent, it will be tough for them to disappoint. That's what I think. But we don't know how the overall discretionary spending environment is. It was under stress, but I think the environment could have somewhat improved last quarter. So it'll be interesting to see if there are some signs of turnaround.
Okay, let me also get on board both Kunal and Naresh and get a sense of the technicals as well. Kunal, hi, afternoon. Seems like yesterday was quite that one-day kind of shake-off. Today we seem a lot more stable.
Yeah, I think the intraday recovery seems to be a lot more better, stronger this time around for the bank index. And I think it's more of a broad-based recovery today, because I was looking at the market breadth, even in the mid-session around the 12 noon. And the market breadth started to show signs of improvement in the first couple of hours after the index went into a further corrective mode. So I think Bank Nifty at one point was sub the 52,000 mark. We've managed to recover quite well, even though there are no major signs of recovery across many large cap names on the banking side. So it's not as if that large cap banking stocks have shown signs of a positive recovery or move for themselves, but it's small bits of everything which is helping the Bank Nifty to try and get into that recovery. The Nifty is holding on to the 24,000, 24,200 key short-term pivot support for itself. So I think that's another plus point to look out for. But I think today when we look at the kind of stocks which are recovering, the kind of stocks which are making new highs, 52-week highs and fresh lifetime highs for themselves, it just gives a sense as well as an indication that markets are now getting into much more stock specific rather than more of a generalistic or sector specific moves which we were accustomed to over the last many weeks.
Tech Mahindra, TCS, Infosys. These are the ones where you could see some rate of change. With TCS, could they build on what they delivered last quarter? Will the string of disappointment continue from Infosys? And has the new change of guard, could that be effective in the case of Tech Mahindra? These are the three factors which in a sense are going to be important. There's interesting news I was reading in the morning, which is that HDFC AMC has decided not to take fresh SIPs in their defense mutual fund, in their defense scheme. They've come out with the defense fund couple of quarters ago, 2-3 quarters ago, and they've decided not to take fresh inflows there. That's what I think I remember reading in one of the media reports. Sandeep, when AMCs who are always hungry for AUM, when they decide not to take fresh inflows, it just tells you either it is high valuations or lack of opportunity.
It could be both, because then all of us know, Nikunj, that the number of names which you can play on the defense theme are very, very limited. Most of them come from the PSU stable, and many of them now trade at valuations of 60 to 100 times earnings. Now, in this environment, it's a good move to possibly stem inflows, but then people have the option of going and buying directly, and there are enough, I think, kind of small case portfolios, etc., lying around which focus on this theme. So I don't think inflows could stop in this way unless and until there is a sharpish kind of correction, which will happen at some stage because the valuations have become unsustainable.
Right, okay, that's the take coming in on defense. Let's address some of the buzzers as well in trade. And while you've got an HP, ONGC holding out very well, Naresh, I want to come to you on three of the smaller plays. Sun TV, India Cements, Polycab not as small, but yeah, still holding up a good 3.5%. Anything on these three charts? Anything where you think there is still further headroom to go and one can go long on?
So Sun TV looks interesting because the stock has finally started outperforming. So for a longish period of time, the stock went from 1100 to 1300, 300 odd levels. Then post-COVID, it has never been able to recover. Now we've started recovering. The last time the stock made a 730, it went down to sub 600, and now finally above 730, 750. But the fact is, what we see is in this move, there have been multiple days where there have been very large volume ticks. So this indicates finally a trend change, and this could slowly and steadily go up higher. A trading stop loss would now be placed at 770. In the short term, it's given a flag breakout today above 800. So positive on the stock, could go up towards 850 and then 900 also.
Okay, let's take a very quick break on that note. When we come back, we'll of course continue our market discussion with Sandeep Sabharwal, Kunal Bothra and Naresh Mirani.
100 points up for the Nifty from the day's low, 17 points off from the day's high. Nothing very meaningful in terms of a trend, so to speak. Reliance is holding on, so that Jefferies report that Reliance is going to take Jio public very soon surely is not having impact on the market mood per se. Your TCS numbers later in the day and then the whole earnings season will start. But the real big chunky move, I think, is happened in some of the railway stocks. I mean, RVNL, Concur, RNRL, some of these, they've seen a huge rally post the entire election verdict. That's IRFC for you, not big spikes today. But in general, this space has done extraordinarily well. Naresh, if you sell on railway stocks, you regret because they are going up. If you buy now, the fear is that they're looking overbought. What should one do?
So the fact is, when the whole railway stock started moving up a few years back, the top names were RITES and IRCON. And RVNL used to be a small name that's gone up the maximum. So if you still want to participate, RITES and IRCON still look interesting. RITES has gone nowhere for the last almost 6 months now. And also compared to what it was, even from say pre-COVID, stock was 350, today it is 700. So it's not got bonkers. So you still have ways to participate if you want to. It's just that they're not in momentum. IRCON on the other hand has gone up, but it has not gone up as massively as RVNL. So I would still go with RITES. That's a play which is still open in, say, railways, where the consolidation is done. The stock has not gone up crazily, and business is still very interesting according to people.
Point taken. So that's a move. That's a status check on some of these stocks which are buzzing around. Just flagging out the other buzzes in the trading session. IREDA is something that we should pull up. It's 13% higher right now. So sudden spike coming in on that counter. The earnings are expected, I think, this week itself or over the course of next 2 to 3 trading sessions. Actually, tomorrow itself, 12th July is the date when the earnings are going to be out. And just ahead of that, there's a huge spike on that counter. And it's not just a matter of today. Take a look since its listing. I mean, that stock has seen a massive rally.
35 rupees.
From 35 bucks to almost like 300 plus right now.
And this is not once upon a time listing. This was
less than 6 months.
Yeah.
Last Diwali or last October.
So
let's look at it actually.
Yeah, let's pull up the longest available chart and see. So yeah, that's the kind of big move that we have seen on that one, up almost 300%.
So it's not like you're comparing it like a market stock which has gone up from COVID's low. See, COVID low, all the charts will look extraordinary.
Obviously, yeah.
But this last year, 2023, the market was in a vibrant mode.
Correct.
PSUs were rediscovered.
Already
themes.
rediscovered to
So
a huge extent.
Exactly. So I may look back at a Tesmaco intraday graph and say, okay, from COVID it is up 10x, 12x, whatever the price is. But that is from COVID low. Here we are talking about 2023 October, when it went public. Sandeep, I don't know what is happening, and every time I don't know what is happening, I come to you.
So Nikunj, I think the easiest way, which might not be possible for you, is that you have to report everything. But stocks which you don't understand what's happening, you just remove from your screen and don't track them. So I don't track this stock. So you have shown me this I think after a long time, and I'm seeing the price after a long time.
By the way,
I don't know.
listed in November
December,
end.
yeah, like
29
December, I
November
think, or yeah,
23.
Closer to
somewhere around
Diwali, that's what I remember. Just
Roughly
in and
around
around
that.
Diwali.
Correct. So what, 6-7 months and 7-8 months, and look at that stock. I mean, in hindsight, we can all say we should have probably used that opportunity. But I mean, Sandeep can have the liberty of probably not looking at some of the stocks. But Naresh, what about you? I know it's limited history to go by, but still, it's very, very tantalizing.
So it is better to pass, and it goes off the touch screen itself. So the simplest way is to forget it.
I don't know if it's a grapes are sour kind of situation for everyone, because I mean it's gone up by a huge extent. Everybody's saying that it's fine, just kind of remove it from the screen and move on. But every time that stock makes a move, it's difficult not to take notice.
Yeah, that's exactly what people who rubbished Zomato when it was around the 40, 50 odd levels must have said as well. But Sandeep, what about trend? I mean, it's kind of those IRADA kind of stories. I mean, obviously it has a much longer trading history. But parabolic moves, no matter what, that stock continues to move from strength to strength.
And it's been backed by spectacular performance. So I think every quarter there are expectations which analysts have. And if you look at something like trend, they just break through those expectations and deliver very strong numbers. And that's the reason the valuations have continued to trend higher and higher, because there's been no disappointment. And in fact, the result delivery has been much above expectations. So there's no reason for someone who is holding the stock to sell. And then there's no equity supply coming in, and new buyers coming in every time. So I think that's the status of trend. So it is a stock one should buy when one should buy. Let's say there's some quarter where they actually disappoint, and then because of valuations, the stock comes off sharply. That will be the time to buy for new investors.
Taken. The other big vertical which is reacting right now is every stock related to shipping. So Gujarat Pipavav, GE Shipping, Mazgaon Dock, all of these stocks are fairly active. And let me take it across to my colleague Prakash, who's joining in with that latest on the shipping, companies as to what the expectation is from budget. Because of course, we had seen that last year it was all about railways. This year, while railways is continuing to get a huge share of infrastructure spend, shipping might also find a big focus. Listen into what Prakash has to tell us.
Yes, we are learning from our sources that the government is likely to make some announcement for the shipping sector in the upcoming budget. We are given to understand that the shipping ministry has made certain recommendations to the Ministry of Finance for its consideration. As per the proposal submitted by the Ministry of Shipping, a special fund could be announced for the manufacturing of ships within the country, a very significant development coming in. Sources are informing that the Maritime Development Fund could be announced on the recommendation of Ministry of Shipping to incentivize domestic industry for the manufacturing of ships within the country. And that will also be in line with the government vision to become self-reliant in the shipping industry. In addition to that, sources are also informing that the shipping ministry has proposed providing an incentives for ships operating on green energy, and therefore Harit Nauka scheme could be announced for inland waterways. In addition to that, some special fund has also been sought to promote R&D in the shipping sector. That has also been proposed by the shipping industry, and we are expecting that some of the proposals are going to be reflected in the forthcoming Indian budget. Back to you.
Right, okay, thanks for those details. That's what our sources are telling us, that the government is likely to make some announcement for the shipping sector in the budget. And sure enough, you can see most of these stocks on a tear. Actually, not just today. The run-up has been for the last fortnight. Most of these stocks, Mazgaon, Garden Reach, have all been holding out very well. Dredging Corp as well added to that list. Sandeep, anything within shipping that you're liking?
Shipping again falls in that the same category where the shipyards have huge visibility of growth, and they have new orders also coming in. But again, the retail frenzy and valuations are so high that we can't buy them now. But then again, on sharpish sell-offs of the overall market or the sector as a whole, this should obviously be a sector which should be in line to buy, but not at these valuations.
Sun Pharma, it's actually turning out to be a very decent week for pharma, decent month, so to speak. Sandeep, any acquisitions, anything which you bought, sold when you were on holiday? I'm sure the laptop and the phone was on.
No, nothing much actually. So just holding on to the old ones and not deploying anything as of now.
And which are the old ones? I think we've discussed names like, let's say, Voltas, Page Industries. Those were the ones we've discussed a couple of months ago with you.
Yeah, so among durables, like we bought into after Voltas ran up, I had also said on the channel we bought into V-Guard Industries, so that's done very well. We are still holding on to that stock, and nothing much beyond that actually. So
When you're
I
saying
think
we,
as
Sandeep, so when you're saying we're not deploying much, does it mean that you're just waiting for a correction to put more money to work, or you're just putting money into the same names that you had earlier?
for fresh money deployment, I would wait out a bit, see if the markets give a correction, even if it's a shallow correction, because we've seen that because whenever there is a small correction on the broader market, sometimes the sell-offs tend to be much bigger, and that can give opportunities. And at the start of the result season, it's always better to have some cash, because then in companies which could surprise on either side. So if a company has been doing badly and then there's a further negative surprise, but you think that this could be the bottom, then you can actually buy, or vice versa. So I think start of results season, it always makes sense to have some cash.
I want to bring up the charts of Sula Vineyards as well, considering that their Q1 update has been strong. The revenue from the own brands has seen an uptick of about almost 2.7%. Not much of an excitement on the stock. But Sandeep, the entire Alcobev space has done very, very well. Anything that you like and you still think is worthy of a buy?
Many of the stocks have moved up, but I think fundamentally the performance has not been that good. On Sula, if you see, the growth was just 2-3% for this quarter for their core brands. Overall turnover growth was 10-odd%, but I think core brand growth was just 2-3%. So, like the rest of the consumer discretionary space, on this segment also we are seeing slowdown. There are some specific companies who have been able to launch good, strong brands. They have done well sporadically. But overall, the sector volume growth is still under pressure.
Good to have you on the show. We'll let you go on that note. But let's get in some closing trades as well, given that we've reached just half an hour ahead of close. Kunal, what's on your list?
So that will be ONGC, and that's a stock which is looking attractive. So very few PSU large cap names are the ones which are showing signs of follow through up move. ONGC seems to be one of them, especially the stock breaking past above the 300 levels.
Naresh, what about your closing ideas?
So oil and gas still looks interesting. So in that, my pick would be IOC. That's a stock which is on verge of a short-term breakout above the 176 mark, multiple attempts done. So it looks like a triangle breakout in the making. So could head up towards 190 in the short term.
Okay, let's slip into a very quick break. Then on that note, when we come back, we'll have more fundamental experts join in on the show.
Welcome back. Not much change at the index level. The Nifty as well as the Bank Nifty is in the red, though there has been recovery off the lowest point, but it's not that it's a breakaway rally or we are turned into the green, not as yet. But yes, the broader markets are faring a bit better. So let's talk a bit more about broader markets and take it across to Ansh to spot some of those price volume buzzers for us.
Right, so Coal India will be the first stock in focus as the stock has given a breakout from its horizontal resistance zone, hitting 1 month high along with good volume of around 2x its trading volume of last 10 sessions. Apart from this, HPCL will be in focus as the stock was actually stuck within a consolidation pattern from last 12 consecutive sessions, and today it has not only given a breakout from this consolidation pattern but has also surpassed above 50 and 100 EMA with good volume of around 2 times its average trading volume of last 10 sessions. Apart from this, we are seeing India Cement has also given a breakout from its 10-session consolidation pattern and has been advancing for third consecutive session. Lastly, Microtech Developers will be be in focus as the stock has given a breakdown from its head and shoulder chart pattern, and it has been facing strong selling pressure at 20 DMA. And if you see the chart on a weekly time frame, then the stock seems to have formed a bearish engulfing candlestick pattern, which usually indicates a potential reversal in trend on downside. So these are the breakout stocks based on price volume action.
Okay, those are some of the buzzing stocks. Let's now welcome on board Rajat Sharma as well and figure out what he's making of the market right now. Rajat, hi, afternoon. Good to have you on the show as always. Just wondering and counting down now to the budget, whether there would be any ease off in the market, given that the pre-budget rally seems to have already happened.
Yeah, I know. I think the pre-budget rally seems to be going on for almost about a year. If you go back in time, and many more years from that. Just before I was getting ready for your show, I remembered many years ago, around 2015, 16. I think I was in your studio in Bombay, and Nikunj had said something about market, and he said, teji ki chhat nahi hoti aur mandi ke paav nahi hoti. And I was just thinking about that, what he said that time, because since about 16, 17,000 levels, market had looked expensive. And I think when it reached about 20, 21, that's where I thought, okay, hang on. It does not look really so expensive because the earnings have started improving tremendously. And that's the sense I get about the market right now. I think in last 15, 20 years, since I've been, about 18 years to be precise, since I've been looking at the market, I have never seen this kind of bullishness and fundamentals as strong as we have right now, where pretty much anyone is saying markets is going to correct, markets should fall. And the reason seems to be only because they've run up a lot. When you look at the fundamentals, when you look at the historic price earnings, when you look at the valuations of some of the companies which we have in our portfolio, they seem still far below where they were when markets were around 20% cheaper from where they are. I guess the reason is because earnings have improved tremendously. How much longer can this go on for is difficult to say. But at this time, I think a wise thing to do would be to have 30 to 35% of your portfolio making 7-8% in fixed income instruments, and the balance you should stay invested in the markets, because typically markets don't fall when everyone's negative and when the environment is so bullish. If you ask me to put it down on paper, I can put down very few things which could be reasons for a market to fall, but it always is a bull from the so can't predict that. Valuation wise, I don't think we're so expensive.
Yeah, let's see what market throws up. For now, it's difficult to call that. But Kunal, what's the view on some of these energy names? ONGC, BPCL, Oil India, Engineers India, all of these are up anywhere between 2 to 10% right now. What's the one that you would want to recommend?
Yeah, I think ONGC is something which we discussed a few days back also. I think on the 280, 286 mark. Looks very attractive even now at 300 plus levels, because the stock has now converted the short-term breakout into more of a swing breakout. So we could now expect the stock to head towards even the 320-ish kind of a range. So which means potentially a decent 5% swing, 5 to 7% swing upside is what we can expect for ONGC even from current levels. From the other names which you mentioned, Engineers India is also something which I've been very bullish on, for I think the last many quarters. And I think what we've seen the stock going into a very big breakout. So, it started off with the stock, I think, hitting a breakout zone, which was around the 130 to 140 plus range. From there, the stock has done exceptionally well. There was this phase where I think in a short span of time, the stock moved from 150, 180 mark towards 250 to 270 levels. And now just around the 300 levels, we've seen the stock consolidating. So I would probably expect Engineers India to also make a very strong comeback, even though it's a few percentage off from its previous 2024 highs, 320 approximately. But I would still believe that the stock looks quite strong and attractive. So these are the two names from the pockets of stocks which you mentioned, where I would be bullish on.
Okay, so that's a take on some of these energy names, fairly active, and of course ONGC is something that Kunal believes has further legs to go. What else is happening in the market right now in terms of the buzzers? Well, Mazgaon talk, you have NLC India, which is doing well. GMR Airports is the other one as well, which should be in focus. Look at the flashes at the bottom of the screen. So that stock is reacting to that. GMR Power was as locked in upper circuit because the FCCB loan conversion has happened at a rate which is almost double versus the current market price of GMR Power. So that stock was locked in upper circuit, and now there's a positive news flow for GMR Airports as well. And this is one stock which has managed to see quite a bit of turnaround turnaround. In fact, Rajat, of late we have seen a lot of turnaround stories, and I think that's the classic indicator of a bull market as well, whether it's a Suzlon, an Inox, things are looking up for an HCC. You of course have GMR, which has managed to turn around as well. Any other such stories that you have managed to scout, or any word on any of these names?
No, certainly. And, it is kind of, proves what I was saying earlier. One of the stocks that we added, recommended the last time I was on your show, which is not even a month back, it was 17th of last month, was a stock which is, again, from shipping, the Great Eastern Shipping. And I've been reading a lot of news about what's happening in the shipping space. And the only reason why I bought that stock that time and added it to a lot of client portfolios at about 1,008 rupees that time was because it was available at very attractive valuations. The economic environment looks very, very robust. And whether it was the crude carriers, product carriers, LPG containers, and dry bulk, all of them were operating at above average capacities, near the highest capacities they have. And the stock was available very attractive valuations, paying 4% dividend yield at a price of 1,008. Now that stock in like a month has run up something like 40%, 35, 30%. I think it's close to about 1,400 the last I checked, or 1,350, 1,380, something like that. And that got me wondering that, I thought it was available at very attractive valuations. It should do very well. Economy is poised for very strong growth. But the way it's run up, particularly in the last 1 month, has surprised me as well. Again, talking of ONGC, I've recommended this stock multiple times from about 128 levels when it was paying a dividend yield of 9%, 8%. Today at 305, it's still available at a dividend yield of around 4%. That's the dividend it pays. We've had clients who bought this at 128, 130, 135, and some of them sold it at 275. Some of them did nothing at that price or till today, and some of them are actually even buying it right now because essentially we do advisory for different clients and different income brackets, and the environment is so strong that some of these stocks which are offering good dividends, which we've added at various price points and continue to add. ITC is the other one, and I think you were talking about budget stocks. That remains one of my favorite budget stocks, and I wouldn't be surprised if that runs up around 20-25% from here till the end of the year, because there's reasons that in about 100 and 250 days, they'll have the hotels getting listed as a separate entity. The only reason why the stock is stagnant for about 8 months, 10 months is nobody knows what, the largest shareholder, British American Tobacco Company, BAT, will do with what they get in the hotels business. I think Finance Minister Nirmala Sitharaman will have a lot of cushion this budget to do things which would help the middle classes. So FMCG business should pick up because it's struggling because of high inflation. Cigarettes, again, is one area where, the last 2 budgets, they've not increased any taxes on tobacco. This time, there is expectation that they will. Maybe that's the reason, and that's what market is waiting for. But that's, again, one of the stocks which is available at very attractive valuation. So I think I wouldn't be surprised if that runs up a lot. So there's, a lot of these stocks which you want to buy. The only thing that stops you is, the market has run up ferociously in the last 1 year. But again, I don't think this is a market to sit out from, because there is a lot of cash waiting to come in, both, domestic and, from what I hear, from, FIIs as well.
Okay, Rajat, stay with us. Well, there are several types of value creation underway in the market. That's the word coming in from none other than Utpal Sheth. In the latest episode of Masterclass, he explains why the value that you buy is as important, and the kind of price that you pay is also more important than that. Here are an excerpt from his chat.
We've all seen that investors would like to buy, let's say, great businesses, good managements at reasonable value. But what is the priority out of these 3 variables? Right? For some people, the valuation is the priority. For some people, the business quality is the priority. For some people, the management quality is the priority. I think in a fast changing world like we are in, and where value shifts and value migration is happening in larger and larger quantum and at a faster and faster pace, one has to be with adaptable and agile management teams. This new age companies that we are talking about have a win the world mindset, okay, where scaling does not have conventional constraints. Most companies think of growth in a very finite way, but in new age business models, maybe networks and platforms, the marginal costs are constantly dropping or are very, very low, and therefore, the returns to scale are phenomenal. The marginal value creation of adding one customer is so massive in the context of the cost of acquiring that customer, right. So, we know that a lot of venture capital funds use LTV to CAC as a framework of looking at companies, but here we have the opportunities of using LTV to CAC in the context of really mature scaled businesses who have already established either leadership or dominance. So, I feel that value creation in this day and age is very different and is much less constrained as compared to the past.
Okay, so those are some pearls of wisdom coming in from Utpal Shade, but in the meantime, it looks like that the market has not moved as much. Yes, we have moved into the green a bit, but it's again just a 4-point gain, so can't really make too much of it. Gland Pharma has actually managed to see a bit of a spike. You also have KIMS, which is Krishna Institute of Medical Sciences, that's also up in the trading session, and then SJVN, Lemon Tree, these are some of the other names. In fact, talking about SJVN, I also wanted your view, Naresh, about some of these power stocks. REC PFCs have been having a great run. Yesterday or day before, there was BHEL which was running up. Take a look at SJVN right now. Is there any power name that you would still want to bet on?
So SJVN and NHPC are the fresh breakouts if you look at it. So SJVN last topped out in February around 160, 170 levels. Then in May, it made a double top around this 150 mark. Today it is coming very close to that breakout. If that plays out, we could be seeing a move towards 170, 180. Similarly, NHPC also after that topping out in February, went through the same consolidation. 115 has been the high for 2 times. If that breaks, you get a fresh breakout here. So in terms of power names, these are the 2 names which are on a fresh breakout. We've seen similar breakouts happen in the CAC also. So across the board, but I would go with SJVN, which looks a better risk reward.
Right, okay, that's the take coming in and some of the buzzing names right now. Let's also take stock of, the losers in trade today, and definitely IT is seeing a bit of weakness. In fact, let's bring up what TCS is up to, and much unlike yesterday, finally you're seeing a good amount of recovery play out on TCS ahead of its numbers, which should be shortly post-market hours. 39.26 is where that stock is right now. Yesterday, of course, with the rest of the market, that also fell nearly about 1.7% or so. Rajat, what is it that you're anticipating in terms of a commentary from IT, given that TCS is today and then there'll be HCL Technologies and so on?
The full year guidance will be revised downwards is my sense. But I have always maintained when it comes to these IT companies, especially TCS and Infosys and Wipro and HCL and some of these large ones, the guidance revision is about 1 or 2% or 3%, and the stock unfairly moves a lot based on that. You look at an Infosys which has been growing at 20% year on year on their revenue for the past many years. The stock in between keeps moving higher and lower. But this is a great story. Again, one of those stocks which pays you a very good dividend. It was close to 3% up to about a month back. It may be around 2.6, 2.7 today. So these are stocks which you should add, and it's unheard of for technology companies to pay these kind of dividends anywhere other than India. I think the reason is why these companies are struggling. If you compare it with some of the US tech stocks, they've run up because AI, artificial intelligence as a theme, has really, caught the imagination and minds of a lot of investors there. And Indian IT companies are not really doing anything in that direction. But I think it's just a matter of time because they're always trailing behind, what happens to their US counterparts. Look at how Nasdaq has gone up and compare it with the Nifty IT sector then in the last 1 or 2 years. But I think if at all, this is a great time to add these stocks. The incremental money that we have. When a client asks us where all can we invest other than FMCG and IT and a bit of pharma, I don't see any merit. Although I think some may argue private banking space is it, but I think that's one area where I'd like to avoid. But I think IT definitely at this time. Let's see what numbers come out for TCS.
Okay, on that note, let's get in some BTST trades as well going. Kunal, let's have your list.
So there'll be a buy on two calls, two stocks. The first one is upon Balrampur Chini. Now that's a stock which, even though it's in the FNO ban, but the cash front, I believe it's looking attractive, completing a flat formation about the 440 mark. So would look out for targets of 465, stop loss at 430. And ITC is something which is again start to look very attractive. The stock confirming a 3-day strong up move, so more of a price volume breakout. Targets of 470, stop loss 447.
Okay, point taken. Just wanted to highlight the numbers at the bottom of the screen before I go to Naresh. So GNA Axles is reacting positively to earnings. Not a huge improvement in top line, but yes, consolidated revenue has jumped up to 400 crores versus 374 crores. I think more important will be to track the bottom line and the margin performance. We'll track that. But overall, the auto OEMs has had a very good time, at least in the last few months. Consolidated PAT has actually come down on a year-on-year basis, and that's why maybe the stock will come down as and when it starts factoring in these numbers and the decline in the profitability. Naresh, your take as far as the BTSC trades are concerned?
So first would be a buy on IOC. The stock is on verge of a breakout. Stop loss at 173, target price of 178. Second is a buy on Balrampur Chini, which has given a small flag breakout here. Stop loss at 440, target price of 480.
Okay, point taken. What else is happening in the market right now? It's more of the same. Engineers, India, Gujarat, Pipavav. But one space which has actually hit the record high level today is Nifty FMCG. Pull up that index and see what kind of move it's making in the last few minutes, because Nifty has been flip-flopping, but the FMCG index is up only 0.3%, but it's at least trending higher. Any fresh bets, Rajat, that you have made in consumption, in FMCG, staple, discretionary, anything facing the consumption vertical?
Yes, in fact, we've got a few FMCG stocks in our portfolio. HUL is one where we've done buying recently because again, so a lot of these names today might sound boring, but if you see them from a valuation perspective, they're available very cheap. They've not moved a lot for a while now, for last 4-5 years. So that's where we are looking to initiate buying there. And my reason is not really because these stocks are defensive. My reason is that these stocks offer tremendous potential for growth. And I personally think this budget could be the turnaround that we are looking for, because the government has a lot of leeway to loosen the wallet for a lot of rural demand stimulation. So I think I expect to see that there would be some ease and clarification on things like soaps, detergents, biscuits, butter, powder. That's been the demand of the lobby, and I expect prices to come down both as inflation eases and the government clarifies the taxation structure for these. So FMCG particularly is one sector where we are looking to pick up a lot of stocks. The two stocks that we've added more of, in fact, HUL is Hindustan Unilever is something that I've bought for the first time in many years. ITC is where we've increased our allocation. I've already spoken about that. So it's essentially from large cap space, FMCG as it should be, like, bread and butter stocks.
So HUL is something that you've dabbled more into. That's the word coming in as far as FMCG is concerned. In the meantime, I want to put the spotlight on Tata Elxsi as well. That stock, of course, reported a number which optically looked weak, but I was expecting the stock to recover on an intraday basis because when they were talking about the transportation vertical, they were very confident, and this quarter as well, 5.3% sequential growth. They also maintained their guidance margin, margin guidance despite the kind of cut they have seen in Q1. In fact, let's quickly listen to what the management had to say, because on the call they sounded confident, but for now the stock continues to reel under pressure. Tata Elxsi's management on the con call.
I think we will, continue to be within the stated, margin range. Around 28% is what we would. Essentially, the way to look at it is if you look at the entire, financial year perspective, we hope to maintain last year's, performance. Maybe beat it a little bit, and all of that depends on, our revenue growth and, in the subsequent quarters and so on. We see a lot more traction in the OEM space, and yes, when you look at a pipeline, it's a bucket of opportunities, right? Not everything is large opportunities, not everything is small opportunities. There's a bucket of opportunities that we are chasing, and I can tell you it's a pretty healthy bucket that we are chasing, and yeah, I think we're confident that we will be able to show good growth again next quarter.
We let you go on that note. Today, of course, we had Dipali Goenka, the CEO and MD at Welspun Living, as the guest editor on the channel earlier today, and she shared with us the growth levers for Welspun's specialty solution going forward and how they're looking to expand their market share domestically as well as internationally.
We've invested. Okay. We've invested for the growth. And now
how much have you invested in 3 years?
And I think we've talked about it. We've invested around 3,000 crores across everything at Home Solutions. Okay. That also includes our flooring, but also includes our green energy that we are also investing in the terms of going the sustainable way. When you have invested and created an infrastructure, we have actually planned and budgeted for growth there. Okay. So as we look at it, we might have to just debottleneck somewhere. Mm-hmm. We might have to put in kind of a cut and sew somewhere. Mm-hmm. And that's the way we are looking at actually creating that ecosystem. So while we look at taking the market share globally, which actually is an opportunity for India and us, that will continue to be there across the categories that we are available in and present in. When we talk about India, I think we'll be looking at the consumer basket, while what we can make, while we can create JVs, while we can acquire some companies, and creating the complete home solutions for the country, and also investing in marketing and reaching out to the consumer. So it's going to be a very interesting mix across what it needs. United States, we're putting in a pillow plant first. We'll put the other 2 also very soon. So that completes that supply chain there. We have our warehousing there. UK and Europe also we are setting up. So I think the key thing also is technology. So while you talk about investment in manufacturing, it doesn't go just in isolation. When you're talking manufacturing, you're talking about Industry 4.0. When you're talking about technology, because it's a long supply chain, it is a little erratic supply chain. How are you integrating the entire thing in the terms of technology, predictive analytics, AI, what the consumer is going to buy? I think these are going to play a very, very, very key role. Otherwise, the inventories are going to pile up and it's not going to be viable for any one of us.
Point taken. So those were the views coming in from our guest editor today, Ms. Dipali Goenka. But in the meantime, also wanted to talk about which are the big events lined up. Of course, the market will react to the TCS numbers which come today, and the fact that US CPI is expected later today. It's expected to cool off a bit, so that's another important indicator. But come tomorrow, India CPI will be out, and that's also interesting. The industrial production as well as forex reserves for US will be out. In India, you have US PPI as well as Fed's balance sheet which will be out. Tomorrow in terms of earnings, you have HCL Tech as well as IREDA, which was doing quite well just ahead of its earnings. There is going to be a case hearing as far as Supreme Court is concerned with respect to the Stampede case. And then global earnings are also quite important. So Citi, JP Morgan, Wells Fargo, all of these will come out with earnings. So these are something that we are tracking at this point of time. But is there a positioning that you should take home as far as TCS is concerned? And let's take the intraday chart of TCS and see how it's doing, because the last time we saw it was in a bit of a green. Is it continuing that uptrend? And any trade that you would recommend on the likes of HCL, TCS, Kunal just ahead of their earnings?
Not really. I'm not a fan too much, Anisha, of taking trades on results. It's always better to try and wait out and let the stock behave. Post results, even if it's up. Assuming post results, even if it's up to 4,100 level, but that would be a more of a breakout move. So I'd be happy buying on a breakout rather than the anticipation.
Right, okay, Kunal Naresh, we'll see you again tomorrow morning with a reaction on TCS's numbers. But let me hand it over to Vinny to walk us through the closing trades.
So absolutely a day that we are seeing Nifty, yes, managed to recover from the day's lowest point, managing to close on the green and in the green, and will be closing with 24,350 on the mark for the Nifty 50. Sensex 2 has recovered from the day's lowest point. Almost 0.1% of gain is what the Sensex will be closing at, with 79,995. So very close to that 80,000 mark again is what the Sensex is at. Midcap, small cap 2 performing, midcap at least performing better than the benchmark indices for the end of the day, closing with gains of almost 0.4 to 0.5%. Small cap 2 outperforming the benchmark indices and closing with gains of 0.8%. Advance decline ratio clearly in the favor of advances today versus a decline, and keeping an eye out on that. Nifty Bank saw a very good recovery of almost 1% from the day's lowest point that we saw the Nifty Bank recovering, and now we'll be closing with gains of almost 2/10 to 3/10% in trade. Let's keep an eye out on those numbers for the IT company. TCS will be something we are watching out for, but Nifty IT closing on the positive side. So TCS is something that we'll keep an eye out on even tomorrow, but today we'll be closing with gains of almost 3/10%. Nifty Media, that's the one that's buzzing in trade as well. Among the top sectoral gainer that we saw coming in was the Nifty Media. Let's pull up a PVR Inox that managed to see some bit of a gain. We also had gains coming in for Nazara, Sun TV, all those managing to hold on to gains today. So yes, interesting moves coming in for Nifty Media. Moving on, we also have the FMCG side, which is still managing to hold on to some bit of a gain even today. So FMCG surely a one that we are watching out for. We are seeing ITC that is buzzing. We are seeing Britannia that was holding on to some bit of a gain, as well as United Spirits, which was holding on to some gains in today's trade as well. Let's move on and talk about some of the sectors that have been not doing quite well today, trailing in trade, and that was the Realty pack, the Nifty Realty that was down and out in trade. And what we saw coming in as a move today, especially Brigade Enterprises, that saw a sharp fall coming in. We also had Macrotech developers, or LODA that we call it as, that was also under pressure. Phoenix, we had Prestige Estate, Mahindra Life developers, DLF, all these under pressure today after some bit of a weakness that we've seen for the Realty in today's trade. Let's move on and talk about some of these individual moves also that we saw coming in some of the stocks. Aluwala Contractor was buzzing on the back of orders that they have received as well. So keeping an eye on that one. Will be closing with gains of more than 3% as of now. Other than that, we also let's pull up something like an RVNL. What was that doing, the railway stock? Because RVNL again is in focus today. Also, we saw some bit of an order that came in for RVNL and was buzzing in trade. This trend of RVNL has been continuing for a long time. Whenever there's an order win, we see a bit of a run up, and RVNL again in focus. Data Patterns, that's true. Well, let's see how that is also going to be ending the day with. Data Pattern was a stock that we are keeping a close eye on. Will be closing with gains of almost 6% in trade today. HPL Limited, that also saw very strong gains, and keeping an eye out on that one too. All these shipyard stocks, Cochin Shipyard, all of them buzzing in trade, and HPL Electric locked in upper circuit will be closing the day on the positive side. But yes, markets managed to recover from the day's lowest point, and the Nifty closing with a slight bit of a positive bias, you could say. Slight bit on the green side is where the Nifty will be closing at.